Hello, everybody, and welcome to the Plus Three Futures and Commodities Show. My name is Ben Maldonado. As always, I'm here with my partner, Barry Hederachi. Barry, how we doing?
Doing great, doing great.
That's good. We're recording here on Friday afternoon, the 6th of March at around 5:15, so the market's closed. The topic that came up today, obviously with the things going on in the Middle East, war is on everybody's mind. And anybody that's traded knows trading is a battle. And one of the things that, veterans and people, soldiers and people in the military always tell you about is there's this phenomenon called fog of war, where, it's hard to make decisions because you're not sure of what's real and what's imagined. And there's this difficulty in sort of seeing through the fog to be able to get to the other side. And I think there's a lot of parallels with trading, especially when we've gone through a period like we've seen for the last, 4 or 5 months. There's a lot of fog, and yet you're still in there battling, but you don't know where the enemy is. You don't know what's important to focus on. You don't know where to aim. But I think one of the things that we can honestly say, and Barry doesn't boast much at all, and neither do I. I boast way more than Barry, and he barely boasts, when he makes great calls. But what I think you've seen is the methodology we use has helped us to, sort of block out the noise, clear the fog, and see what's important. And you've seen what's happened to the grains. You've seen what's happening in the indices. You've seen what's, happening in the currencies, through the methodology that we use. And again, it's not that we have a crystal ball or we're, some sort of future seers. It's just focusing on the squares and the price levels and how, the market interacts with that level. That's where the real signal is. And I think that's, one of the things that is the hallmark of this methodology that, Barry's put together over 30 years and I learned from him for the last 15, 20 years. It really does help clear the fog. So with that little commercial over, we looking at the S&P here, Barry, and we see something that it's rolling over, just like we've been, saying with the time cycles and other things. Hey, things could happen, and then the price action, while looking sideways, you can see by looking at it through the lens of the square that we're starting to roll over, and somebody's holding this thing up. The question is, when are they going to stop?
Exactly. And this is kind of what we've been talking about for the last couple of weeks. It was really about, what can we pull out of this? What's the signal here? And the signal was really, even within this sort of sideways, we were noticing how we were making lower lows and lower highs. That was really the key. And if you guys go back and check, or if you guys are watching regularly, so we've been following that to see how we unwind this thing. And we talked a lot about that, coming up to this week. If you guys go back and look, we talked about how these highs came in late December. All of these high points, here, late December, early January, and then late January. These are all highs from different cycles, right, or different squares. And after each one, we had some kind of a little bit of a reaction, but we never really changed the trend. I mean, the closest we got was after the high in October, right? We had a nice ABCD down, but that held structurally where the old support was and reversed, and we were looking for a lower high. Now we got a lower high here, sold off, but inside bar reverse and back up again. So after this point, we were waiting for the next set of cycles, which came in basically in January. After that, we kept talking about that. If you guys remember, we were just talking that to death. So the thing, what we saw after that, we were looking for lower highs and lower lows, and we started to get that. So I'll stop there, and because you guys know, I don't want to bore you with what has already happened, because all the videos are up in this channel. You can go back and look at those. But looking at, there's some really cool stuff to look at this week. So stay tuned. I'm going to go pace it through one by one. So here we had 68.20 was sort of the level we had to, break through and get stuck below. And then we had the 67.27 we've spoken about a few times, right? Especially after the December low came in there. And we talked about how we have a structural support. Look at the October highs, the December low, all that lines up with the 67.27. And you can see Wednesday, we went and tagged that. Of course, we got a little bit of a false break against the low in December. And we had a 1 day bounce. Remember, 1 day bounce. And we reversed. This is really kind of important because we were consolidating here, sort of a 1 day out, 1 day out of the consolidation and reversal, right? Reversal, 1, 2, 3 days down, counter trend, another day down. So it's starting to look weak. It's not like in the old days we had all this, from last week, you can see it's a lot more constrained, and there's definitely lower highs coming in. So lower highs, lower lows. I mean,
Barry, I
uh,
think that's incredibly important because there's a perfect example of getting signal in the noise, right?
mhm,
One day counter trends. When
exactly.
a 1 day counter trend shows, in this case, weakness, right? And
Hmm.
in a bull market, it shows strength, right? If it can only get 1 day, one down day in a bull market, and then it reverses all again, and starts running again, that's strong. Here
Yeah.
we're seeing the opposite. But if you don't know the signal to look for, you miss it, and it just all looks like noise because hey, we're just chopping around. We're going up, we're going down, we're going up, we're going down.
Right. And then it all looks like sideways without any sign of anything, right? No signature.
Right. And
Yeah.
it's a really important thing because I don't think a lot of people know that or use that as a signal.
Yeah, that's the thing. Some of the stuff I don't even mention because you figure everybody knows this. Why am I repeating? But sometimes you don't know. You don't know what people are watching. So we had that going. So we came and touched 67.27, eventually reversed and back down again. All right. So now, I feel like we basically cracked the 68.20, even though we managed to sort of last 2 days, we managed to have open and close. Most of the daily range was the range between the open and the close was above 68.20. But, you can see we're getting pushed lower and lower. So once we get below this basis the daily, then the 67.27 is going to get challenged. And if that goes, then everything's going to kind of move a lot faster. Now, whatever was holding this in place is starting to lose its grip, right? So however people are hedged, whatever derivative they're using, once certain levels get blown out by whatever news item, then everybody has to shuffle very quickly. And that's when we get these bigger moves. Anyway, let's not get too far ahead. For next week, we're going to watch 68.20 and we're going to watch 67.27. Obviously, if we take this out, we're kind of definitely entering a weak area. And the next set of support is around 6,600, 6,638. Those are the two levels. I would point at the 50% level, but also this 6,600, 6,601 is what we have. This is the cash chart. So we'll watch those two. To the upside, well, we have 6909, which we really didn't touch this week. So I'm not sure if we're going to go and tap it now. But that's what we have to be upside if we can manage to get above 68.20 and stabilize and pull up ahead. So this is 68.20 is like the balance point, and we have the two, I guess, the wings, right? 6809 and 6727. Anything you want to add to this? I mean, the picture is going to be filled in nicely as we get through all the other indices. But do you have anything to add to the cash here, Ben?
No, I think that's good. Let's go check out the other indices.
Now, remember, guys, when we start looking at the other charts and the weeklies, this is not just standing alone, sort of waving in the wind, right? We had, monthly, I had resistance here from a monthly chart going back more than 20 years. So there's a lot of stuff here. And this is part of what we saw since October, getting stalled here and really, really, really getting pushed. And then we also saw this other theme, which, and we kept saying, this really looks like distribution. It doesn't look like, we're consolidating a buy and discontinuation at the end of January. In here, it just didn't look like it was happening. It was more like to me, it was like this. I think I mentioned this back in November probably or December, how it looks like consolidation. So we're getting more signs of it that being true than not up until this point. Well, why is that? Well, because we're starting to make lower lows. Okay. So I'll leave it at that. Let's
Mhm.
take a look at, and I'll cover the couple of weekly charts we look at afterwards together. So it's just a little bit faster. Let me look at the continuation chart for the E-mini. This is coming off the April low, 7,001. And as soon as we hit that, I was telling you guys, hey, this is pretty good resistance. And until we get settled above that, we're not buying anything. If anything, we're going to be selling the rallies, and so be it. Now we did see this triangle forming, and we were talking about, well, how is it going to break? We had a couple of conversations around that. We're going to break to the upside, false break to the downside. Well, anyway, it looks like we slipped lower, and that doesn't look like a false break right now. So we'll follow up on that. In the meantime, it's 66.80, 640. 66.40 looks like the area that the next big support is, okay? Okay, so 66.40 is what we're looking for support. And there's some structural stuff there and a little bit below. I mean, if you were just looking at the charts right in here, 66.45, 66, 65.50, 65.50. And that rings a bell, right? So this
Mm.
this this level is something to watch in the ES, 65.50, and also then we have 64.60 below that. But 66.40 is the next one we're really watching. And taking a look at the front month, this is coming off the April low as well. So here, you guys, ever since we banged up against the 70.20, at least I would say the upper line, because that number might not be the same back in December. I mean, on the December contract, right? But anyway, ever since we started banging up against that, again, the idea was, look, we have to settle above that. Otherwise, this whole thing is kind of suspect, mainly because we've had a number of cycles that expired at all these highs, number of these highs. And of course, the support level we're looking at was this 67.36, which is the full 216 degrees up from the April low. And we eventually got there. My God, we could have gotten there. I mean, we got there earlier, but that was a little, we had a little bit of air above it, ran back up, little air below that, started compressing. And then we eventually, you can see clearly how we got stuck below this quarter level.
Mm.
And then the reversal got us right into the 67.36, and we closed just 4 points from it. Now, for next week, obviously, this is the number we want to watch. We slip below this, stuck below 67.36. Well, we have a lot more to go, and you can see clearly. Are we rolling over next week? Let's see, what is 6? Yeah, I'll have the new contract up, but let's just work with this for now. You guys can kind of mark out the same levels, I suppose. So 65.94 is the level we want to watch. Not just watch, but that would be the target basis of March contract if we lose 67.36. And that, this has a pretty good structural support. So it's another area to watch. And here, this is that similar area, right? The 65.30 comes in right about there where all the structural support, 65.30, yeah. And in this case, 65.94. Guys, watch that closely. Next, let's take a look at the Nasdaq. Nasdaq, we were watching this midpoint, this 25.140. We kept talking about that. Long as we're above that, it's a little stable. We can get some rallies off of it, which we did. And then we started straddling it this week, in early February, and we talked about that. Then the idea was, look, we can be a little bit more firm above it, but we're going to be weak below that. So at 25.140, once we got below, look what happened, right? Remember, we were just under it, just holding up. We had this one day sort of the false break above these highs. I drew that line to show you guys. We reversed, and 1, 2, 3 days down, and just couldn't get back up. Even on on this little reversal day, we really couldn't do much business above that. And we broke, we were talking about this ascending triangle, how it could false break to the downside. And it looks like, we pushed one last push, and now we're down below. Well, we're not out of the gates yet, because you can easily make a case where we're still in the consolidation, right? The big part of the consolidation. You can say we're still in this consolidation. And until this low goes, the low on February 6th goes, we're still sitting pretty in this box. There's no question right there. If you were none the wiser, and that would be just fine, and we'll just continue to pretend it's some kind of a consolidation with nothing else happening. But we can see how we started losing levels. We couldn't hold about, any of these levels we couldn't hold. As we start losing levels, the momentum starts to pick up. This week was a really good example. Last week we made a meager high, false break, down. Okay, found a trend, couldn't even get above our level. Now today was a big down day. We'll see how it moves next week. So what's the level to watch? 25,140. Now, if we are still below it next week, basically we're on a slippery slope here, with 23,700 being the next big support. Okay. And that is kind of big support because, we have structural support and all that. And this is going too far ahead, but, you never know. 22,216 is the next big level down if we lose 23,700. Okay. So that's something to keep in mind. And let's take a look at the Dow futures, which really kind of followed through nicely. We talked about how this was a false break last week, and how all this price action wasn't exactly bullish. And we talked about how it's 49,484, how this bar, on the 26th couldn't hardly get above the level, right? And once we lost that, we reversed on that bar, meaning the price took the low of the high bar. It was straight down to 47,162. And I remember talking about this on the last episode, because we talked about that being pretty good support. Now, if the Dow can maintain above it, fine, we can consolidate and take a little bounce. But, now we have all these overhead, right up into this, all the way up to this 48,800 level. You guys can eyeball that, right? But now, if we lose this 47,162, that opens up a whole lot of downside. And you can see the major support level from there is this 44,882, 42,873. These become big levels. So I have an arrow here, so that must be a big one. So so I would watch this 44,873. That's a big one. And the other one is this 43,723. You'll see how these prices come in. But like I said, it's getting a little bit too far ahead. So let's see what happens at 47,162. And you can see prices have really come down into our support levels, and we're just there. In a way, it's kind of easy because we saw how the Dow, once it broke this trend line, we were down. Now we're sitting on support. Obviously, you can have another counter trend, but the key level is if we take this level out, then we're going to be in just a little bit of trouble. I know you're going to cover the Nasdaq a lot better. We've got weekly charts coming up. I'll leave all that to you and take a quick look at the weekly charts. So here's the weekly cash. Remember that little expanding triangle we drew a while back? And we kept tapping this 7,000. I kept saying, look, this is nothing to do with the upside till we can settle above it. And well, we didn't. And now look, if this expanding triangle is to continue, we should probably reverse next week and try to move higher, at least get to the 50% of that expanding range.
Yeah, the 50% level would be a really nice spot.
Yeah, I know, right? We're elevating to that, but let's see. let's see. I mean, these things happen, the perfection, perfect textbook cases happen. If it happens, great. But, we have other numbers to look at. We have 5/8 is a good level, watch 3/8. Those are all good retracement levels. Now, what I wanted to mention was this is kind of on support because we have about a month of price action sitting right below this. So if we lose that on a weekly basis, we're going down. We're going down. Next, any support we can count on will be around 65.15, and then we know it's good because that's where the lows in November held, right? So we have that. So if we can really slip and slide, that's where we're going to go and meet. Barring that, of course, we have a lot more to go, but markets don't necessarily go straight down. So we'll look at it. So we talked about the retracement levels. We talked about expectations to the downside, because if we slip here, we definitely open up down to about 65 and some change. Okay. That's kind of a given. The other chart I wanted to look at was this weekly chart that we got in place. And I was pretty convinced that this is the chart we're gonna hold for a while. And remember this line, you guys. I drew this geometry line and said, look, either we have to, I was talking about the probability of it, price breaking the circle and the square line at 7,007 and the geometry line, which are all derived from different things. They're not all, they're unrelated, right? Unrelated tools. And if we can break all that and get on top, great. We're going to have this great rally, probably up to 70, to 7,300 and some change. And that we would trade, because if it can break through this kind of geometry, it's going to be pretty strong. Flip side, obviously this is resistance, and it's just going to continue to get weaker if you can't get above, right? So, and before we even get to the midpoint of the circle, which would be right about July, we're starting to slip. All right, enough about that. So 66.50, 66.35 to 66.50 is where the midpoint is. So I would look for support there. And barring that, we have a lot of room here. We have 6,400 next. And anyway, downside it sort of opens up, let's just say. And with this much time spent, we have quite a bit of overhead now that we're slipping through. This is why, if we can get, I'd be surprised if we can get a 50% counter trend back out into this range that we've been putting in. So let's see what happens. But for now, you guys kind of get the drift, and the drift is drifting lower, I guess, is the thing. And take a quick look at the 30-minute.
Love those circles.
Yeah, that circle's been really good. About as good as your circle on the crude chart.
I was going to say, wait till the boys and everybody see the crude circle.
Now, I just want to do a quick run through the 30-minute. We got a bunch of ABCDs that completed, which helped a lot this week. All right, we were looking, well, I don't know, I forget where we left off last week. Well, here, 27. So 6,900 was a key level. If we were getting above it and hold above, then we can go up and challenge higher levels. If we couldn't get above 6,900, we were looking for weakness, right? If we took out 68, 62, further weakness. So what happened? Overnight, we went in 68.09. We didn't quite get to 67.52, but we got to the next quarter level, and we managed to get back up. 68.09, we basically held here, bit of a flush, came back in, expanding triangle with the lows at 68.09, got above 68.26 right there. And once it broke, I think we were looking for a squeeze here, and an ABCD at least. So we went way past that, right up to 6,900, and couldn't hold it, right? We reversed. And once it reversed, boy, it was all over, because on that reversal, we were looking for really weak markets below 68, 62. This was major resistance, by the way, going into this week. And failing this would be really, really bad. Of course, failing this was sort of a yellow flag, and each level is sort of signals a different type of weakness, right? So 68, 62 was the big one. Once we lost that, we sat here for a couple hours, 68.42, and then zoom right back into the lows. And remember the 67.17 and 66.92, or was it 17 and 52? These two levels I had, the only two support levels I had on the board. On the way down, we stopped here first, had a little bounce, couldn't hold about 67.90, came back down to 67.17, really nicely, I should say, and a big reversal back up to 68.42. And from there, we made a higher low and ran right back up into 6,900 to test it. This time, it was sort of the death nail, right? Because it was a lower high and just couldn't quite make it, and I think we had a fuse line right up in here somewhere. But from there, we were looking for 68, 62 to weakness below that. and you can see what happened. We just started to slip, and the bounce on the fifth, we couldn't hold above 68.42, and just slipped. And today we were already selling off by the time the opening bell came in. We came back, and the low was, of course, we came back to the old 67.17, did a little false break, which was sort of the telltale sign, and rallied up. But then, I posted this line, you guys can see this, saying that, look, as long as because earlier this morning, I was looking for strength above 67.52 and weaker conditions below that. And then once I saw that, then I saw the resistance here. I dropped a line, I posted it. Sure enough, we went really close to the line, just couldn't make any headway towards 67.90, and we rolled over. Not just rolled over, but then we ended up below 67.50 for the day. So now we're on the flip side. Obviously, so next week we pick up the thread at 67.52, and you can follow it from there. And the June chart's looking really great. So I've been plotting it for a while now. So 67.52 from Monday. What about the lows? Where can we go? Well, we have 66.98, and then you have 66.50. Okay, those are the two levels I have. All this mid-level stuff is not really going to count, because now we're going to pick up velocity as we get through these levels. So 67.50 was a big one to lose. If we lose it, if we don't, let's say we pop up open and we settle above that, then we have 67.90 to deal with, and we play the same script to the upside. Anything you want to add there, Ben?
Yeah, we're playing the same script, but notice how it's ratcheting down.
Yeah, absolutely. That's
The
exactly what's
levels are
happening.
moving lower.
Now, I wanted to go through some of the fuse line trades, but I think I spent enough time on the indices, and somebody even left a message last week and saying, look, can't you guys talk about gold and silver a little bit more than spending so much time on the indices? But it's
That
just
in and
because,
of itself is a signal.
well, yeah, it's kind of a signal, but fair enough, right? I mean, crude, we have to spend more time now, and also gold and silver. Yeah, it's kind of a signal, but I was thinking maybe we are spending a little bit extra time, but a lot more people watch it. That's the thing. A lot more people are trading the indices or some index related thing. I'm going to try to squeeze in, but you have to manage somehow. All right, let's move on to bonds.
Big reversal in bonds this week.
Big reversal. We ran up. We were looking at the 119.16 area to be resistance. We got pretty close to it. Big old outside reversal. Came back down to the level and dipped a little below. So I think the play, we're right back to this 116.13, 116.5 level. This 45 is still in play. What are we going to watch for? We're going to watch to see what happens in the next few days. You guys know the basic script. If we can settle above that, well, we think then it's more prime to move higher than lower. We're going to hang out here and start making, we're getting quick reversals to the downside, and we get below this, then we can probably go back and visit the 114 area. But you can see we're managing to keep the bonds in a pretty tight range. And looking at the weekly,
Outside reversal week when I looked at it.
yeah, it was pretty dramatic, right? If you look at the weekly. So the weekly, it's still within. Weekly was still within the brackets that we talked about. The high came in exactly right on the tap the line, 119.12, 119.13. We were right there, and reversed. So 114 is our support. So yeah, are we gonna hang around here for another few months? It's possible, but we're watching this little area here. You can start on the daily. There's 116. If you can hold above 116, which we're doing barely, right? If we can hold above that and kind of hang around, I think it's more on a positive footing than a negative footing. Let's continue to watch that going into next week.
I'll tell you what, Barry, the bonds are saying higher rates, and commodities are saying higher inflation, higher prices.
Yeah, it's a hell of a place, right?
Yep. They're all they're in agreement right now.
Yeah. We'll see what happens here. Let's take a look at the weekly. Weekly, you can see again, you can see exactly where the break off was coming off the lows back in 2020. And it didn't, this gap could have happened anywhere in here. It didn't. It had to wait to come to that. And then it happened, right? I mean, this
Hmm.
could have happened midweek, it could have happened midweek. It didn't. So this is the beauty of using squares and waiting. I mean, this is how it really kind of works if you follow through patiently. And coming off the high back in 2020, if you look at it, we found support at the same around the same level, which is around 58 and a half. And you can see, we're kind of a rounding bottom, and this is not exactly bearish. So once we tap the support and we keep tapping, we're not going any lower. Well, guess what? It's going to start moving higher. And we made the half square, damn near the half square in 1 week. So, look, we almost made the 50%, and that's at 94, let's say 94.40. So if we get past 94.40, we're going to open up a whole nother level. So
Hmm.
that's the key thing to watch out for, because if we get through that and we settle above that, well, we're going to have a little bit of heat to deal with. And looking at the entire picture, we have the capacity to go up and test that. We can get above 94. We have the capacity to go up and retest these highs back 22.
Yeah, the Russian Ukraine highs.
Absolutely. So
Hmm.
we can do that. And so now you guys, the crude is flowing. So this is the time to trade it. It's great. So that 76, 75, 76 number is really important. Watch that.
Hmm.
All right, let's take a look at crude.
What a move.
What a move, right? And
What a
it's not
move.
like we didn't see it coming. So here's a
Right.
good case for signal to noise. Everything we talked about. If you guys are regular viewers, you'll catch this. We were watching these lows coming in, and we were looking to see if we're going to make, start trending. We were looking for trends. We were looking for higher lows, and you can see, we had a couple of false starts, really couldn't do it, and we kept saying, look, like over here, we held above 61.61 and everything. Like, and the deal in August was, look, if we can get above 64.75, we can run again. Just like we did back in June. But we didn't. We sat under it. Then finally, we gave up below 61.61. And at that point, we knew, okay, let's go find the low and get this over with. It was just drifting. But that drifting added, eventually ended up becoming a nice low to go off of, because once we got the low in December, again, we were watching to see, are we making, we starting to trend. Well, we started making higher lows. They started trending. And then our sort of the view was to see if we can get above 61.61, hold above it, and if we can clear 64.75. And the whole talk here, I mean, you guys can check the videos. The talk here was we need to hold above 61.61 to get things stabilized to the upside, like an accumulation period, right? Before the break. And then we're really not going to get any momentum till we get above 64.75. It hasn't failed for years. So this has been working. So 64.75, we came up last week and held above. And I said, as long as we can hold above that, I think the word I used was prime to go. And now it's time, now that we settled above it, it's time to start trading crude. And sure enough, this week, we got that in spades, and your patience paid off. So there you go. We got $91 crude. And I remember looking at that and saying, look, if we take out 73.50, this 79 is not a big deal. And if we take 79, we're going to get to 91. And I laughed and said, yeah, I know it sounds funny, but these things
And
happen. Do you remember
right. You did it in a day.
in a day? Yeah, exactly. Exactly. And you just don't know. We just don't know. We just know the levels. We just know the direction, right? We just, it's hard to tell it's going to be 1 day or 2 day. But the main thing is the reason we work with price levels that we know where the targets have to be. So 90, great. Now look, if these pullbacks hold above 79.50, we hold above 83 in this zone right here. I'll draw it in for you guys and we'll leave it up here. If the pullbacks hold above that, market is very bullish, right? That's just how it's going to be. And the next level to really challenge is up in the 97 area. We have 95 to 97 is the next resistance. And if we settle above 91, then it's going to be even, very bullish. So that's just how all that looks. But for now, let's just take it as it comes. We have really good structural support at 79.50, and any pullbacks holding above 83, 79.50, market's in pretty good shape. So enjoy the ride. Hope you guys catch a lot of good trades.
And Barry, you're talking about the fog of war and signal versus noise. Watch the crude chart and watch how it reacts to these important prices, because that will tell you what's going on in the Middle East. Whether
Absolutely.
whether it's spinning out of control or it's going to be short-lived or it's going to be a long slog, the price of crude is going to reflect that. And that's how you can find signal in all the noise that you're going to see. I just watched, and Twitter's great too because you get news, but you see crazy reports. Oh, they sunk a U.S. carrier. Or, oh, this is happening and that's
Right.
happening. Just watch the price of crude, and you'll
Exactly.
know what you'll see. You'll have a really
Yeah.
good idea what's really going on.
And as with everything else, when you watch the grains, you know what something's happening. We don't have access to all the news why somebody's buying wheat, but we see the price moving higher
Now
and
we
and,
know
and
though, right?
and
Wheat
now
and the grains were moving because there's gonna be shortages in the Middle East.
yeah, that's why grains move.
And we didn't know that a month ago when we saw, hey, these things are perking up and it's time to go. But we saw the signal. The signal was the price.
Absolutely. And that brings up another point, and this is about how how you have to, the trader mindset. Part of that, one aspect of that is to keep the news separated from your analysis. Because if we were trying to guess when is this going to happen, when's that going to happen, we have no idea, man. We're just mere humans, right? Mortals. But by just watching price action, we can kind of because we know at least we're working with probabilities, so we know what to expect. We knew, holding about 61, 61, very precise. This is not just guessing. That's going to end up being bullish soon as we broke above 64.75, and that happened perfectly. Now we don't have this kind of great examples all the time, other than June, and we had it earlier. So it's not like every week there's a great example of it because these are big moves and these are big markets. But when they do happen, that's why we want to kind of look at them a little bit closer, so you understand it's the same concept that works in obviously in all markets, but commodities and indices, these are very good. And just in closing, Ben, the pattern on this, what you're seeing is these screws are getting tightened every day. It wasn't like a blip and then a reversal back to 64.75.
No, nope.
We just kept getting pushed higher and higher, and we closed in the week at 90.90, right? Okay, fine. Now, oh, what a deal this is, if we get pulled back and crude at 80. So, watch these levels. This is where we want to watch counter trends to happen. If we come down here and reverse, these are gonna, we're on the buy side now. We talked about how once we leave the gate here at 64.75, the buy side till we get to the next square, which is 95. We're pretty close. So the initial boom is good. Now, of course, option volatility and premiums, everything's built in. So that was a boom. So watch for 95. From here, we can have some kind of a pullback. So we'll follow through as we go. But I better get going because
Mm-hmm.
we have to go into overtime. All right, let's move on to the easy stuff. Guys, the reason I haven't been spending too much time with gold and silver is because we spent a lot of time down here, back in
Mm-hmm.
22, 23. I remember back in the breaking up this triangle. We spent
Yeah,
a lot of
those
time,
triangles we talked a lot about
right?
how the
Because this
corrections
is,
were sideways.
mhm, that's where you're going to try to get in. Now, once we start flying, yeah, it's in the news, but we're not really. You're already in. You ought to be in by now. Now, fine. That doesn't mean you can't still trade it. So let's cover this. But that's kind of the main reason. But I understand, and your comments help. So if the more comments you guys leave, the better I understand. The the larger mindset. So it'll help do better work. But anyway, this 49.29 is a level really we want to watch. It's the 50% of the square. And the basic thought is, as long as we're above that, we're kind of like the crude 64.75 level. Gold is kind of primed. We can pump higher. And for now, obviously, with a massive run like that, we're consolidating. 52.92 is a level we want to watch. Once we settle above that, we open up the next level. going up to 6,000. So for now, probably gonna do a little back and forth filling. But as long as all that filling is happening above 49.29, we're in pretty good shape. If it's happening above 5,100, even better. I think that keeps gold pretty clear. I don't want to make
Hmm.
it too confusing. Keep it on a clean line. Now, silver, I mean, numbers are easy. They're all kind of like the key numbers to remember, 72, 81, and 90. And you can see we're kind of in there. We held above 81, which is bullish, I would say. Now, if you can get above 90, hold above 90, that opens up to 110. But now it looks like I mean, if you really look at this, I mean, look, one nice thing about looking at it like this, you can see the block. Most of the consolidation is contained within the 72 to 90 block, with 81 being sort of in the middle. So if you're in the upper end of it, well, it's more bullish than not. If we get under, well, then 72 becomes a focus. And the other reason not to talk a lot is, other than to watch these key levels for framing, is because, we had the run. We talked about silver to death all through here, all through as we were building up, getting ready for the move, Doesn't mean we shouldn't talk about it now. I'm just, because I was thinking like, wow, why don't we cover so much? Because the train already left. All right, now, copper, again, we've been consolidating ever since the square out came. We did have a false break run up, but we didn't have a whole lot of follow through. That's very bullish. So we left it at, above 565. As long as we're consolidating there, copper's in a strong position. And if we can get above this 589, 88 level, it's even in a better situation, right? That's what we're watching. That's pretty much it for copper. Let's take a look at the weeklies for the metal weeklies. Here's the weekly gold. We held above the 3/4 level, which was 5,015. And the level to really get onto the next cycle is 52.25. Let's say 52.38. Fine, right in there. If we can clear that, we're in pretty good shape. Up until then, this is all consolidation levels. So even if we get down to 48.15, we're in pretty good shape. Basis the weekly for gold. Okay. And remember all the metals kind of squared out at the high. So part of the thing, what's happening here is, we have to let the correction play through.
Yeah, they're big squares.
Yeah, and big squares
Big squares.
and a huge move. So it needs the breather, and we're just monitoring like everything else. So this 84 is the level on the weekly silver chart. If we're above that, we're kind of primed. We're in pretty good shape to test higher. Test higher on the weekly would be 120. 120 would be the other end of the square from 84. And the midpoint is, of course, 102. And if we get below 184, then we can expect, coming down into the 74 level, 72 level to look for support. But this is, now it's the matter of just waiting for the corrections to be done, and we'll find that as it's coming in. For the weekly copper, remember that false break high was right at the 650 was our square line. That was resistance. Now 593, if we can hold above that, is great. This is the weekly, but we're just, we're straddling that for a while now. So it's here, no there. If you look at the quarter square for resistance, 566 or so is, I would say that would be the level is resting on, right? So 566, watch that. Put it really quick. And as long as we're above that, I think we're pretty good shape. Even coming down to 535, we're okay. But for now, again, like I said, metals are kind of taking a break, correcting, consolidating. So we ought to let it do that.
Let them rest.
Let them rest. No reason to get in there and
They pass the baton to the grains and crude for now.
There you go. All right, let's move on to Bitcoin, and we can go a little bit faster. We have a couple of things we've been talking about lately would be the 68,580 level, and the fact that if we can hold above it or not, and as long as we're below that, the market's in a weaker condition. And if this lower trend line goes, that will be the signal to visit this 52,000, 54 level that we saw in Ben's charts. Above that, we can kind of stabilize and try to test higher. This line coming down is some geometry that I had put in a while back, and I said, as long as we're below that line, we are susceptible to downwinds, and we can the pressures to the downside. And sure enough, I mean, look at this. We went up and tapped it. Next day, gap, right? And now we're below 68,580. So going into next week, that's the level to watch. Week or below, a little bit more from above. And that's that. Looking at the dollar, pretty much like crude. We've been looking at the bottoming formation. We saw the ascending triangle. It broke to the upside, and you can see, it really didn't have anything between 97 and 99, and we went right to the 99, and that's where we stalled out. And taking a little breather now. Look, if the dollar can come back and find support around 98 or above, have some air around it, right? 98, 98.30, and turn back up. I think the next stop is, going up into the full square. That's around 101. So that's kind of the upside, what we have left. We did have a potential kind of a false break, but we really didn't follow through hard. So I'm a little bit suspect of that. We do have the lower trend line to watch. We have the breakout level to come back for a retest. It's possible we come and retest and then we go. So be open to that. That's what's happening with the dollar. And if you look at the euro, that we are all short from way up here, right? Remember the false break and all of that. So here last week we talked about the triangle. If we break to the downside, well, we're going to go lower. And if we go up, it's another chance to sell. So finally, right? We had a nice break. Now we're below the 50% level, and that is 1647.
Like that 1650 thing again.
Yeah. Yep.
Remember, for a long time you were watching 1650.
Right here. Yep. 16. Might as well go back to that then. 1650. That was a level to watch. So we're below that now, and looking at the pattern, it's okay. Just like the dollar, we could run up into about 1750 to retest and turn back down. That doesn't matter, but I think the overall pattern is really starting to work. But we're not into some big old trending situation yet. We're just at the lower part of the boundary. But the signs are there. I guess that's the main point here. Let's take a quick look at the weekly, and then we'll jump over to all the commodities, which are starting to get a little bit hot. All right, US dollar again. If you guys have been watching, we caught that low 95.50, pretty much at the tail. We got above the square level, and my big test there was, look, we have to get through this 97.83, this zone, and get on top of it. Well, we got on top of it. Great. Now, all this is done and over with, I hope, until we get the next pullback and move up. We don't really know, but it looks pretty good. It looks like we flush, got everybody scared. Dollar's not going anywhere. Next thing you know, we're up 3 points, right? So big move. Again, this is the potential false break I'm looking at. So it's a possibility, but long as 97.83 is held on in the pullbacks, dollar's in pretty good shape. Here's the euro chart that if you guys have followed, the story, basically ABCD was met here. We thought that was the high, came into a false break. Then we had a lower high reversal. That was the place to get short, and now we're going down. We basically took out the lower trend line, but we haven't quite gotten above this 1654 level. So if we get above that, we can see what happens. But as long as we're below that, the market's pretty weak. Pretty weak condition. You can also drop a trend line coming off the highs. So that wraps up the currencies. And natural gas. You covering natural gas this week?
Yes, we're going to cover that. It's
You are,
perking up.
okay. Yeah, I was going to say, if it's not perking up now.
I mean, look, you could see you got a low, a high, higher low, higher high.
This could be the real
Baby
thing, the real deal, finally.
Baby steps.
And maybe the real deal, right? Finally, let's see. So anyway, you're going to cover that. That's great. Hang Seng, basically, 26
Gave
to
it
30.
up, huh?
Yeah, well, 26,230, we took that out, came down, we came back to the next level, 25,000. So I guess we're consolidating here. Very weak below 25,000 and very strong above 26,230. In between, I'm guessing something like this, going to be consolidating. And that wraps it up. Let me put it back to you and let's start with the Nasdaq and see what's
It's a lot
happening.
to cover. It was good coverage and a lot to cover.
Thanks. Yeah, a lot to cover, but I want to get into these grains. So, but
Yeah, the commodities are back.
okay, here we go. I mean, it's funny after a week like this, we're like, well, that's all we get to show for, show for it.
It's the signal and the noise, right?
Yeah.
1 or 2 day counter trends is all we've been able to do. And then we reverse. I mean, the key thing I want to show on this chart, because you kind of reviewed it already, the key levels here, the 50% of the square, which is 24,263, and then the structural support at 23.9. We tested it here, we tested it here, we tested it here, here. Let's see, because I think this is the area. Once it gives way, then we've got the big flush. As we've been talking about, we're stair stepping down. The other thing I do a daily post on the NQs, the 90 high to high and the 48 low to high, which is 48's in the Gann death zone, 45 to 49, they had an impact, right? We got confirmation from
Absolutely.
price that these cycles were meaningful, right? Because we have not been above 25,720 since they came in.
Look, that 90 high to high is a usual winner.
Yeah, and it as I said, significant reaction. So we just note that when we look at this chart. Quick look at the calendar day. You can see why that 25 Barry has it at 25,132. I'm at 24,975. You can see why it's so important. And we've been crisscrossing it and battling violently, for the past month and a half, 2 months.
Hmm.
But notice that it's struggling. It can't get higher. It's getting lower highs. Maybe we squeeze into here a little more before we go, but the longer we stay below this, the more pressure there is to the downside. And there was a nice 72 calendar day low to high here also.
Yep.
All right, let's quickly take a look at the weekly and the monthly. Here's your weekly. Now, the cynic could say, oh my, we've been, inside 4 straight weeks because of this big down bar. But the key is we're below 25,932, which is the half square, meaning the pressure is to the downside. Just like, on the daily, that level 23,966 here on the
Hmm.
weekly is there. We get below that, we're going to go down to this full square and test 22,000. Circle did its job, right? Caught the high
Yep.
circle in the square. It's not as nice as the one you have on the ES, but it's there. Geometry's there. All right, let's take a look at the monthly, see what we're seeing on the monthly. Monthly so far for March, we're inside, but take out that last month's low, and that's 2 months down. And then it's 24,000 test. We lose 24,000. 21 is next. So as people that watch the show regularly, it takes time for the monthlies to come around. But again, the clues are there. If we put a second monthly bar down, that'll mean a 1 bar counter trend on a monthly basis. Sign of weakness. So all in all, the tide is turning, and the clues are there that things are getting weaker for the NQs. Anything you want to add on the weekly or monthly here, Barry?
No, we're good. I think yep. You framed it pretty
Okay.
well.
All right. Let's take a quick look at Bitcoin. So there's good news and bad news for the bulls. Good news is we broke up out of the triangle. Right? We had this triangle drawn. Bad news is we couldn't get above that half square. And now we're back in the triangle. So it's a failure, right? Means odds are
Mhm.
tipping towards we're going to break through the bottom of that triangle. Here we did the opposite, right? We broke down out of the triangle. It was a fake move, and then we went back in and went up. So that's what I think is the potential bad news is if we stay in this triangle, odds are we're going to break down and maybe go down to fulfill this, you know, ABCD, big ABCD. So we got to watch that. Let's look at the weekly. Weekly, you can see we were pushed up into that death zone of overhead and of structural resistance, and we failed. Good news is we had, you know, two weeks of full bars below, which could have really cascaded. Now we crisscrossed, so at least that, you know, some hope for the bulls there. But again, we're closing the week underneath, gives us a shot at printing another full bar below. So there's pressure. There's still downward pressure. And the monthly, look at where the high came in, Barry.
Wow.
Yep.
Yep.
That's not bullish.
Oh, not yet.
We got to get, you know, if it crisscrossed it, it would be a better sign, right? Because then it would be okay. They're fighting. They were able to, you know, prevent a full month from printing below. So far, we just tested it. And right when you get stuck under, you know, bad things happen for the bulls. Here's an example of stuck under. What happened? What can happen? Right there. Anything you want to add on the monthly here?
No, we're good.
Let's go to commodities. Busy week in commodities, lot going on. We'll go through it as quickly as we can. There's wheat. Boring wheat. Hell of a week, huh? Main thing I want to show here is we won't go back and reiterate, you know, why we got involved and why we said, hey, it's time to pay attention back in October, back in August. Nothing to do but pay attention. The higher highs and higher lows came in, but look at what happened when we broke out here. We broke out perfect structural back test, right?
Mm-hmm.
And then it gave us the launch. So now we're going to start heading, as long as we're above 607, we're going to head to the half square at 641. If we can sit on top of that, you know, then it opens up, you know, almost $800 wheat. Big bar today. Let's look at the weekly. There's your weekly.
There we go.
Yeah, it's getting ready to launch out of a big long channel. Big one. So 680, we get up over here. 681 is next. We sit on top of that. Then it's again $800 wheat. But you can see once the boring starts turning to higher lows and higher highs, it doesn't get boring much after that. Notice that. Look at it. Remember that weekly a couple weeks ago, and he said when I said, "Hey, we sat on top of that half square." That's very
Mm-hmm.
bullish. And there we go. Let's
Not to
quickly look
forget
at
taking out the high of the inside bar.
That's right. Very positive development on the monthly. We're pushing above this 595, which is an important spot. It's a full square, and you can see going back a lot of price action on here. So next month, conceivably, if we stay on top of here and have a low stay above that, we've opened up again $700-800 week, and there's a potential for, you know, one of these monster launches that happen when you get above this 595 level. So you look what happens when we get above 595. Boom. Get above 595, test it, boom. So that's the kind of action we can look for potentially over the next couple of months. Can we get above, test it, stay on top, then we can go. Anything you want to add on wheat?
Well, I think no, I think great coverage, and we need to start trading it.
For sure.
Not continue to trade it. Watch that 595. You know, that's kind of like the prime line now. Because once we're above that, things can reel up pretty quickly.
Very much so. Just go back and look at your monthly charts and look at where 595 is and throw a line on it and go back and look at history. All right, let's go check out corn now. Corn also had a good week. There you see. Last week we were talking about this 446 level was key. Crisscrossed it for 2 or 3 days, 4 days actually, and then Thursday, Friday we broke out. So 464 is the next spot. That's a quarter square there. And then after that, it's 482. So corn is on a roll.
On the move. Yep.
Mm-hmm. Look at this shakeout. I was looking at this. Boy, did they 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 swept up a lot of corn there.
That was nasty.
I mean, one day power moved down, and then we just moved right up after that. Amazing, amazing the moves these guys make.
And that's when you know to double back, jump right back in, you know.
Yeah,
If your setup is still there, you got to jump back in.
yeah, for sure. I mean, it was another higher low, right?
Yeah. Yeah.
So, all right, let's take a look at the weekly. Weekly's just a thing of beauty, right? A, B, C, D down, come up, sit on top, go up, made a higher high, pull back a higher low, sitting on top of the 412, and then we just motor up and take out those highs. So 464 is a level, right? It's a quarter square. But after that, it's $5 corn. 517 is next at the 50%. So everything is A-OK there. Here's your monthly. Now, this is a really, just like that 565 in wheat, 463 in corn is big. Why? Look left. And again, notice what happens when you get over it and clear it. Notice what happens. Big things happen. Get your corn charts out, put 463 on it. Watch that. Watch that level. It's monthly clearance that lights the rockets. Just like the 565 for wheat, it's monthly clearance, but it's
Mhm.
there. Look at, I mean, this was what, a 6, 7 year base.
Big base.
Here we've got a smaller one, but still it's the same launch pad, which is 463. So anything else you want to add here on corn?
No, we're good. We're good.
Okay. Let's go to soybeans. There's beans. Just been motoring.
Beans are not looking back.
No. I mean, last week we were right here, like testing this resistance last week. And then
Mhm.
this week, 3 or 4 days, crisscross it, and then boom, pushing up. We're going to 1200 beans. It's just, it's textbook once it gets going. There's not a lot to say, not a lot of analysis that we have to do. We're just watching it go level to level now. Let it trade it level to level.
Yeah,
With
that
the
11 and a quarter, that 11.25 was the last good level to watch.
Mhm.
We cleared that 50% and then boom.
Yep. Now you'll see on the weekly and the monthly other important levels, right? We talked about this last week. 1170 was a key spot. Now we haven't cleared it, because we just crisscrossed it this week, but now we're above it, and next week we could clear that. That means we're sitting on top of this high, last November high, and the push will be to 1227. Then after that, up to the full square of 1283. And on this one, the launch pad has been 1060 in this move, but in this, clearing 1283 can get us really into orbit. So that'll be the next one we watch on a weekly basis. Let's look at the monthly. This was the key formation.
Yep. Yep.
Once we broke out of it, we tested it, and now we're going. So 1200's in the bag. 1275 is next. We clear that.
Beans
It's
in the teens after
it's
that.
beans in the teens. That's right. So they're rolling. You just watch for pullbacks, watch the levels, and you can trade them. If you have a core position, ride it, but you can trade level to level when it's moving, and it's moving. Anything to add on beans?
We're good.
Okay.
We're good.
Let's talk about the softs. The interesting thing about the softs, we're gonna cover cotton and we're gonna cover coffee, but sugar and cocoa both made lows, highs, and a higher low. Now it's early because they've been in downtrends, both of them, but I want you to start watching them. Most likely they're going to be on the show next week because we'll get that higher high combination that we want to see, higher low, higher high. But watch sugar, watch cocoa in the coming week. For now, let's talk about, and it's interesting that all four of them are starting to move. So money, we know money's going in. We've said this before. Money was going into the ags. Money's going into the
Hmm.
softs. Again, fundamental reason, no idea. I have no clue what the fundamental reason why is, but the charts are telling us money's coming in. That's the signal. Here's cotton. This week we did a little pullback, right? We had this low. We were calling out when we gapped above this 6260 and then started moving, we said, okay, this is a new thing, right? We have a low, we have a high, which was a higher than this high. Now we pulled back and we had a reversal today, a daily reversal. So that could set us up for a fast move in cotton. And when we get to the weekly monthly, you'll see why this was resistance. But we want to watch this and see. We could pull all the way back to 6260, sit on top of this full square and still be bullish, right? Because it would give us that higher high.
Right.
But what we're seeing is it's sort of sitting, not a, what would you say? There's no air here or anything, but it's still bullish structure.
Right.
As long as these lows hold.
Mm.
Let's look at the weekly. Here's the resistance, right? 66.41. So we went up, tested it, pulled back this week. Now let's see what happens in the next week. Right? We want to get above that, sit on top of it, because it'll give us both a weekly reversal and a higher high. So this is a big week coming up here for cotton. Here's your monthly. You can see when we bring these things up early, the weeklies and monthlies aren't even close to developed yet.
Right.
But you've seen what happens, by looking at the grains. If you go back, last 6-8 weeks and look at the shows, it starts with the daily, then the weekly comes on, then the monthly comes on, and as the weekly and monthly come on, momentum really kicks in on the daily.
Right.
And that's the pattern. So we got a normal pullback here on the daily. Let's see if it's a bullish pullback. We think it's going to be. If it is, again, potentially we could be catching the fast move. Here's the first leg. Here's the first pullback. Here's the second leg higher. So let's watch and see. Remember, it's a possibility it fails too, but we'll know where, right? If it can't hold 62.60 and we get stuck under there, it's done. That's it. No big move.
Well, for now, we're just watching, waiting to see the first signs.
That's right.
We're waiting for the smoke to clear.
That fog we talk about.
Exactly.
But there are glimpses of green fields there, and that's why we're looking at it and watch we're following it. All right, let's look at another one that's early but worth looking at. Coffee. Okay, remember we came down here, made a false break, and now this week we've got the first move up, and we're clearing 2090. Ideally, what I want to see is I'd like to see a little move higher and then a pullback that holds above 290, because that would be a really fat pitch entry right there. Play the reversal here for the move up to 335 or better. We had a square out here. Nice square. I think it was 108 by 108. I have to check 108 by 108 with a false break. Had timing, 90 days here, high to low, the lower high, not the false break high, but the lower high here, 90 days, high to low. That's good sort of cluster of signals that we may have seen a tradable bottom here. But we'll see how price action evolves. We're getting the signs are coming. Let's look at the weekly. So we made the low here, false break. You can see just a lower low last week. And this week we cleared 279, the half square, and had a big up bar. Mm-hmm. So let's see if we can tack on next week and make a higher high again. Let's look at the monthly. You can see the monthly when you're at these corners, the monthlies take a while to develop. But so far we haven't made a lower low this month. So the real action here is the daily. Let's see if we push up a little more, and on any pullbacks we can make a higher low. Higher low reversal, especially if it's above 290, is a hey, let's take a trade. Let's take a flyer on it. Anything you want to add here on coffee?
No, we're good. Like you said, I think the short-term stuff is kind of in place. We're waiting for the longer-term stuff to line up.
That's right.
Yep.
I mean, ideally what we're looking for is a move like this, right? We came down off the high, pushed up, did a little ABCD down right into this 290, and then boom, took off. That's the pattern we're hoping to see develop over here. And if it does, this is what we want to catch.
Mhm.
So that's coffee. Uh, Now let's go on crude. Since Barry did such a great job reviewing crude, I'm only going to show you the circle chart. And because I think this is the one we've been talking about for months. I, was putting it up as Barry was, saying, hey, the bottom signals are there, things are coming. Just take a look at this thing.
Wow.
Okay, remember the reason we were talking about the circle, and I put this up while not recommending any longs or anything yet, was I said the circles when they're working, the geometry will like capture price, cause a fast move along the curve, but once it breaks out of the curve, there's a fast, strong move in the
Hmm.
opposite direction. And if you remember in December, I said January, we've got a bar outside. In December, we had a bar outside of the circle. Now we're going to watch to see, do we get that sort of opposite direction fast move that can happen more times than you think when you get the geometry right. Well, there you go. There was the move in January, there's February, and of course, here's the move in March so far. It's astonishing. It happens. It's what makes finding these circles so fun because you never know what's going to come of it. I mean, here was the one I was showing as an example, right? We caught the edge of this circle and we went up strongly and then came out of the circle and then look what happened. And it repeats. So that's the reason, at least one of the major reasons I use these circles is to define price action like in these areas, right? But to also use it to help me capture these fast moves, either on the downside or in this case, once we break out of the circle, it's like the spell is removed and it can, it can run. And it does run. And then the other thing, using the circle and the square, we said, hey, once we're out of the circle, then this 71.59 is important, right?
Hmm.
And then
Exactly.
look at the acceleration. It's like a chick hatching from an egg, right?
Yep.
Boom. Welcome to the world. Anyway,
Hmm.
that's the fun with circles. Last one we said we wanted to talk about was nat gas because we're seeing green sprouts here.
Yep. Yep.
We had this low come in. We said, listen, this low is in an area where we found support plenty of times before. So let's see what happens out of here. Well, we pushed up to the half square, pulled back. Now we made a higher high. I think 321 is key. We got to sit on top of that daily basis. If we do, then 377 is next. And you guys have seen how this thing moves when it goes, right? When it captures levels, like here's a good example, right? We got above this half square, pulled back,
Yes.
sat on
Hmm.
top, gapped up, sat on top of there, went up to the next level, pulled back, and just, it loves, climbing the stairs and also going down the stairs. But for this one, we're looking to see a
Sliding,
weekly.
sliding down the stairs.
Yeah, jumping out the window, basically. 321 key level, right? Daily basis. Let's watch
Hmm.
321. We can sit on top of that. Then we're off to the races. I'll quickly show you weekly, monthly. Even though again we're at a corner, so there's not a lot bullish about them. We did do a weekly reversal, so you got that going for you. Here, a weekly basis, we want to clear 317. That's three-quarters of the square. If we sit on top of that, then it's the 371, which lines up with the 377 on the daily. And quickly, we'll look at the monthly. Monthly, we got an inside bar, which again, when you're at the turn, you don't want to see any lower lows, so we're inside here. But we've got work to do monthly basis, which is not surprising because we're at a corner. So look at the daily. 321 is the key level. We sit on top, 370, 377 is in the cards. So keep an eye on nat gas. It wants to join the crude party. Looks like it anyway. And that's it. That's it for the commodities. As Barry said, the metals are correcting. They've handed the baton off to the rest of the commodity complex, and they're wanting to run. The grains are running. The energies, we know crude is running. That gas looks like it's going to start. Money's coming into the soft. So, unfortunately, it's signaling that we're going to have a lot higher inflation because if these commodities are all moving higher in sync, things we buy and eat and use, these commodities are going to be more expensive. So prepare for that for sure. Barry, that's it for me. It was an exciting week, and I'm going to rest up this weekend because I think we are in for more excitements next week. The one other thing I'll say is I made a post on X because you and I talked about this. There's a cycle with the U.S. hockey team, right? We won the medal in 1980 we beat Russia, essentially winning the
Mhm.
medal on February 22nd, 1980, and the U.S. won their first gold medal since then on February 22nd, 2026. I went back and looked and found a cycle. And I looked at the S&P and it peaked right around the 22nd of February, 1980
Mhm.
and proceeded to correct 18%. We had a secondary peak in the S&P on February 22nd, or right around, that was a Sunday. So it was either Friday or Monday. We had a peak right near there again. And now we've started this correction. So it's an interesting thing to watch. It's obviously nothing you can trade, but it's interesting to watch. And if you check it out on X, you can see the post. But given the outlook and the signals that we're getting from the S&P, it looks like history is going to rhyme.
We're watching it in real time.
That's exactly right. So we'll see. Great job, Barry. Good coverage. And thanks everybody for subscribing, watching the videos, liking them. We appreciate your help in growing the channel. And we'll talk to you next week.
Thanks, Ben. Good job. And we'll see you guys next week. Leave us your comments. Let us know what you think. Please like and share when you get a chance if you like our like our work. All right. Bye-bye.
Take care,
Thanks.
everybody. See
Take
you.
care. Bye-bye.
Bye.